Category Newsflash Format 3 Act What Happened / Why It Matters The Takeaway Target Length CN Pukfex Speech Words.
Let me tell you 2 facts about Toyota that both came out on the same day. Fact 1. Toyota Motor Corporation has become the first company in Japan's history to cross 50 trillion yen in annual revenue. That's roughly $340 billion. For context, that's larger than the entire GDP of Denmark, generated by selling cars.
Fact 2. In the same fiscal year, Toyota's operating profit fell 21%. North America, Toyota's most important market, swung from a 100 billion yen profit to a 300 billion yen loss, and the company's guidance for next year signals another 22% drop in net profit, which would put earnings at their lowest point in 4 years.
These 2 facts are not contradictory. They are the same story. On May 8th, Toyota reported its results for the fiscal year ending March. The headline numbers are a masterclass in corporate paradox. Revenue 1 trillion yen, up 1%, a historic first. Operating income 1 trillion yen, down 1%. Net profit 1 trillion yen, down 1 trillion %. Vehicle sales 1 million units, up. North American operating result a loss of nearly 100 billion yen, the worst in recent memory.
The culprit is right there in the footnotes. U.S. tariffs cost Toyota 18 trillion yen, approximately $18 billion, in a single fiscal year. For comparison, that's more than the entire annual operating budget of NASA. It is by far the largest single tariff bill disclosed by any Japanese company.
As we covered in episode Arserwu, Toyota had been bracing for this hit since the tariff regime escalated in early Tanarserwudian, but forecasting the damage is different from absorbing it. The actual results are now on the table, and they're stark.
There's one more wrinkle in this story. The CEO who steered Toyota through the tariff year is gone. Koji Sato, the engineer who replaced founder's grandson Akio Toyoda in April, Nissan, stepped down on April 1st, just weeks before these numbers were released. His replacement is Kenta Kun, Toyota's former CFO, a man Automotive News described as a numbers guy who arrives carrying a $9 billion tariff bill. His first earnings call as CEO was May 8th, Nisruk, the same day he had to explain a 49% collapse in fourth quarter profit.
That is a rough way to start a new job. To understand why this moment matters, you need to understand what Toyota had spent the last 3 years building and why a tariff wall can undo it.
When Koji Sato became CEO in Nissan, Toyota's critics said Japan's biggest automaker was too slow on electric vehicles. Tesla was scaling, BYD was coming, and Toyota was still defending the hybrid. Sato's response was to double down on what he called the marriage pathway strategy: hybrids, plug-ins, and eventually battery electric, but all on Toyota's timeline, not a mandate from Brussels or Sacramento.
The hybrid bet looked contrarian for 2 years. Then, U.S. EBU demand softened. Infrastructure stayed patchy, and suddenly Toyota's 1 million electrified vehicles, representing 40% of all its sales, looked prescient. Battery electric sales actually grew 5% in FY2 ni ruk, reaching 14,000 units. That's small compared to Tesla, but it's growing fast, and the hybrid business is generating the margin that funds that growth.
So strategically, Sato's Japan left Toyota in a strong position. The product lineup works, the technology bets are paying off.
The problem isn't the product, it's the geography. Toyota was built as an export machine. The majority of vehicles sold in North America were manufactured in Japan or, increasingly, Mexico. That model worked brilliantly for 30 years. The weak yen made Japanese exports price competitive, and Toyota's quality premium meant it could command margins that covered the shipping and logistics. Tariffs don't care about quality premiums, they just add a flat tax to the invoice price.
The numbers tell the story. North America delivered new 10.3 million vehicle sales in FY new ni rules. Up 18% year on year. By all volume metrics, North America had a great year. And yet North America posted an operating loss of nearly 300 billion yen. Sales up. Loss deepening. That is what a tariff wall looks like in a financial statement.
The new Kenta comes from the CFO seat, not the engineering floor. His mandate isn't to design the next great car, it's to simplify the product lineup, cut structural costs, and restructure Toyota's geographic risk profile. He's a financial engineer arriving at a moment when the car engineer's job is mostly done.
Here's the structural challenge he faces. Toyota committed in November to invest $10 billion in U.S. manufacturing over 5 years. In March, slick the first billion landed $1 into the Georgetown, Kentucky plant to retool for Toyota's first American-made battery electric SUV, and first million into Princeton, Indiana for expanded Highlander production. Toyota is essentially building a tariff wall around its American business, manufacturing in America to sell to Americans, removing the exposure to import duties.
That's the right long-term strategy, but it takes years and billions of dollars to execute. And while that factory is being retooled, Toyota is still paying $40 a year in tariff costs.
There's a darker subplot too. Toyota's FY2 Niden and guidance includes a new cost line, the Iran war. Middle East conflict is expected to add 400 billion yen in additional headwinds next year. 400 billion in materials costs. 100 billion in other expenses. That's a 14 billion impact from a geopolitical event Toyota has absolutely no control over. Add that to the tariff bill and you start to understand why FY2 Niden and guidance calls for operating income of just 1 trillion yen, the lowest in 4 years.
This is the fragility that critics of Japan's export model have always pointed to. When you build at home and sell globally, you're exposed to every currency swing, every trade policy, every geopolitical shock. The Toyota production system is one of the greatest manufacturing innovations in history, but it can't engineer away a tariff.
So where does this leave Toyota? Let's separate the short term from the long. Short term, the numbers are going to get worse before they get better. Management guided to 3 trillion yen in operating income for FY2 new strin, down from 2 trillion this year. That assumes FACA owers yen to the dollar, a reasonable but not guaranteed assumption. If the yen strengthens, exports become less competitive. If tariffs escalate further, the cost impact grows. Toyota itself admitted the tariff situation involves significant uncertainty.
But long-term, Toyota has 3 advantages that most companies in this position would envy. First, cash. Toyota sits on one of the largest cash hoards in corporate Japan. The company can absorb multiple years of tariff pressure without existential risk. This is not a company that goes bankrupt in a trade war.
Second, the hybrid moat. As other automakers scrambled to build out pure EV lineups that customers weren't buying, Toyota's hybrid volumes kept growing. The 4 million electrified vehicles in FY2 Nushruk aren't a bet on the future. They're a cash-generating reality today. Every hybrid sold funds the Ford transition. It's the most capital-efficient electrification strategy in the industry.
Third, the American manufacturing play. The Georgetown plant producing an electric Highlander isn't just a tariff hedge, it's also a signal to the American government, to American consumers, and to American workers that Toyota considers itself an American manufacturer. That has political value in a trade war environment.
The real question for Kenta isn't whether Toyota survives the tariff era. It will. The question is whether he can accelerate the localization strategy fast enough to prevent another ETN Sambayan trillion in damage next year and the year after that.
Koji Sato handed off a company with excellent products, a vindicated technology strategy, and a profitable core business. He also handed off the largest tariff bill in Japanese corporate history.
The engineer built something great. Now the accountant has to figure out where to put it. Sources: Toyota Motor Corporation, FY2 Nijrulik Financial Results Pressroom.toyota.com, May 1 Nijrulik CNBC, Carscoops Automotive News Carbuzz Benzinga EB Magazine Business Upturn May Nijrulik Den.